I will show you how to find strong supports and resistances on any price chart easily in 2 simple steps. You will learn to identify key levels and support and resistance zones on any time frame and for any trading strategy and style. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. And our first step will be to find the key levels. We are on Euro-Dollar chart on a daily time frame, and in order to identify key levels, we should concentrate our attention on significant highs and lows first. Let's examine that low right here. It is a key level. It is a key support. Why? Because you can see that the market was falling rapidly, but that level was the turning point for the price. Once that level was reached, we saw a dramatic change in the market sentiment. From strongly bearish, the market became strongly bullish, and for that reason we see that it is a key level. And because that key level is below the current prices of Euro-Dollar, we say that that key level is a key horizontal support level. Following that logic, we can identify more supports. We have a significant key support level here, we have a significant key support level right here, and we have a significant key support level here. And at that stage of our analysis, a question may arise. Why, for example, we don't underline that support level? Why don't we consider that key support level to be significant? In comparison to the key levels that we already underlined, that key level is a bit specific. Why? Because in the recent past, cheaters, last days of big end of winter sale. Until tomorrow, you can get a lifetime access to my premium group with a 40% discount. Inside, you will get the access to my streaming group with daily live streams, live analysis, and live Q&As. You will get a lifetime access to VIP Signals group. You will get 2 books and the trading course teaching you my trading strategy and technical analysis. Visit my website for more info. It is vasilytrader.com. The link in the description below. Don't miss your chance, traders. That key level was already violated both by the buyers and by the sellers. That key level lost its significance, and for that reason we do not underline that and we will not treat that in future. The main thing that matters when you draw the significant key levels is the recent price action. The key level should be respected by the market by the recent price action. If the price level was respected many years ago and then was completely invalidated and neglected by the market, we don't treat it and we don't consider that anymore. Now let's talk about key resistances. Key resistances are the significant key levels that are above current prices, and we can find such a resistance right here. In the past, it was the support. Multiple times it was respected, and after the breakout, it turned into resistance. Then a bit higher, we have a very peculiar case. You can see that we have strong horizontal key level right here, and right here. You can see that we have multiple levels lying very close to each other. You can see that over time, the price respected these levels, so we underline these 3 levels even though they are lying very close to each other. And we also have a significant resistance here. So far we spotted a lot of significant supports and resistances, and we will assume that in future the market will react to these key levels. From the supports we will expect the bullish reaction, and from the resistances we will expect a bearish reaction. Once we identify the key levels, we can look for the zones. Trading for many years, I realized that just the identification of key levels is not enough for profitable day trading, scalping, and swing trading. It is much better to try to identify the support and resistance zones based on the key levels that we spotted. Support and resistance zones will help you to execute more accurate analysis and will help you to make more accurate predictions. And here's how we look for the zones. When we look for support and resistance zones, we will look for the area based on the wick of the candle and its body. Look, over here is the example of the support zone. You can see that we have two key levels based on the significant lows and based on the wicks of these candles. When I draw the support zone, I take the low and the lowest candle close. That is how I draw the support zone, and with that I will expect that buying orders will be placed within that entire area. I will consider that within that entire zone, buyers are placing their orders, and once the price enters that zone, lower it goes, more and more and more buying orders become active. Following such a rule, here's our second zone. You can see that again, that zone is based on that significant low and the lowest candle close. And one more important thing that you should remember when you draw the zones, you should always look left at structure and you should analyze the recent price action, because sometimes it leaves important clues. You can see that here we have a very important wick, a very important candle with the long tail. And for more accurate analysis, it would be much better to take into consideration the low of that wick as well. It will give you a very significant support zone. And now let's underline our third support zone. That zone is over here based on that low and the lowest candle close. And you can see that here we got a strong bearish movement. So according to my logic, the buyers were placing their orders within that entire zone. And from that upper boundary of that zone, buyers were already buying. And lower the price went, more and more and more and more buyers were placing their buying orders. And now let's discuss how we draw the resistance zones. When we draw the resistance zones, we take the key level, the key resistance that we spotted, and based on that we draw the zone, and the lower boundary of that zone will be the highest candle close. You can see that in the price action here, our highest candle close is here. So that is the lower boundary of our resistance zone. And now let's examine the case when we have multiple key levels, multiple key resistances lying close to each other. Like here, we have 3 key resistances, and you can see that the distance between these resistances is just a couple of pips. And when we see the case like that, we just unite all these key levels into one single zone, and then the lower boundary of the resistance area will be the highest candle close based on this price action. And now let's discuss our last resistance area that is a bit unique and specific. I'm talking about that area here. We are drawing that zone based on the rules of drawing the support zone. Though it is a key resistance here, and though it is the resistance zone, we draw that based on the support zone rules. Why? Because in the past, in the recent past, it was a strong support, and the market respected that as the support, and it turned into resistance after the breakout. The breakout made that zone the resistance. For that reason, we draw that based on the rules of the support area. All the zones will be used for making predictions, for the market analysis, and for accurate entries. The main thing that you should know about the support and resistance zones and key levels within them is that while the market is testing the support, we expect a bullish movement from that. If the price violates the support, then we anticipate a bearish continuation to the next strong support. When the market tests the resistance, we expect a bearish movement from that. And if the resistance is broken, we anticipate a bullish movement higher to the next strong resistance. And in order to make charts better looking, I always recommend my students removing the key levels from the chart, because they make the chart a bit messy, and in my view it is better to keep just the zones, the areas on your price chart. And now let's cover one more example of a complete support and resistance analysis. And following the rules that we discussed, let me show you how quickly you can execute the support and resistance analysis. We underline the key levels first. Yes, that is our first task. And then based on the key levels, we draw the zones. Here's our first zone, second zone, then we have the third zone right here, and we have one more zone based on the current high. So you can see how quickly I spotted key levels and support and resistance zones based on them. I used that strategy for the identification of supports and resistances for many years. It always provides the strongest zones and levels for very profitable trading opportunities. Let me know traders in the comment section if you have any questions. Also remember that until tomorrow you can get a lifetime access to my premium group with the 40% discount. For more info, check the link in the description below. Also traders, please watch my other videos.